So guys, now we are adding the three sector model. Now we have G in our model. Remember, government expenditure is basically government spending money. Now, when the government spends money, they normally have a budget they pass every year. You must hear that, like the budget is here and the budget is passed and all that. When the government passes that budget, the budget basically tells the government how much expenditure they plan to do. And we can say this, that government's decision about expenditure could be dependent on how in the past things were, but it may not be dependent on what we call income that we have for the future. So, can I say this, that government expenditure is also what we call autonomous? Why? Because government independently decide how much money they need to spend. Where do they get their money from? Tax revenue. On the other hand, we can say this, that the tax revenue that they get, like T, this could be induced, or what we say dependent on national income, or Y. So we have, in a closed economy with government, we assume that government expenditure is also, according to the Keynesian model, autonomous, that is not dependent on income. Uh, and in this government expenditure, we do not include transfer payments, because these are the payments for which no output is produced in return. Remember, so no unemployment benefit, no pension, and all that. But this government expenditure is all the expenditure that you have on goods and services. On the other hand, T is an induced expenditure, which is on basically, which is dependent on Y. So, for example, I can say this, that if you look at the equation, we can say this T minus G is government budget balance, right? Where T is your tax revenue and G is your, of course, government expenditure, right? And we saying this, that this government expenditure is completely autonomous, while T, the tax that the government is generating, is induced, which means dependent on income. The more income an economy have, the more taxes they will pay. Won't you agree with me? The more richer you are, the more tax revenue you will have. So that's why T is definitely what we call induced. This part is induced, which is dependent on income, while government expenditure, we believe, is basically autonomous, which means not dependent on national income. So that's one thing which we need to understand. Now, guys, if T minus G is greater than zero, what does that mean? Government is earning more revenue than spending on. Can I say the government is running into what we call a budget surplus? Okay, which means government actually has more money now. If government has more money, we call this public sector savings. Are you all with me? The public sector, the government is ending up saving money because they didn't spend that money. But they could also be T minus G less than zero, which means government is running into a budget deficit. Now, remember, this is different from current account surplus or current account deficit. A lot of people sometimes end up mixing the budget surplus or budget deficit with your current account surplus or current. That's your X minus M situation. So this is called a budget deficit. And when you have a budget deficit, what do? We call it public sector. Public sector, they need to borrow. So public sector borrowings will take place. Okay. Remember, so far our model didn't have T and G. And T is what? T is taxes, but T is also a withdrawal from the sector, and G is a injection. So W is your S plus T now, right, in this model, and injection is I plus G. So what are we doing now? We are now moving on to what we call a three-sector model. A three-sector model with no, or rather I should say, a three-sector model with closed economy and government, which means no international trade. Okay, guys, does that make sense? So now my AE equation will be what? AE will be C plus I plus G. That's one thing that I need to remember. Now I want to talk about one more thing, guys. Let's say our tax has an equation of 0.1y. Okay, what does 0.1y means? My tax rate is 10%. So anytime you earn 100, 10% is tax away. And my G equation is, let's say, to be consistent, let me just figure out G was what in our, yeah, G is 170. Let's say my government expenditure is 170. Okay, so G is 170 and T is 0.1y. So I come up with this kind of an equation. Okay, and you see, T is a function of Y, which means more income, more taxes, while G is flat. Okay, and so T minus G could be T minus G could be your 0.1y minus 170 is your what we call it government budget balance equation. Okay. Now I want to move to an important discussion because something has now changed. And I want you guys to draw it with me. On one side, write two sector. On the other side, write three sector. Guys, in a two sector, if I give you a dollar, if a change in Y is $1, what was your MPC? Remember MPC? What was our MPC? My MPC was, what's the value of my MPC? Look at your notes. 0.8. Shabash. The MPC was 0.8 and MPS was 0.2. And so in a two sector, there was nothing else that was happening with my income. If I give you a dollar, 0.8 you consume, 0.2 you're saved. Now there's a little complication here because if I give you a dollar, change in Y is 1, government initially takes up how much of it? 0.1. So I will call this MRT, marginal rate of taxation. It's two names for it. MRT means marginal rate of taxation. The government is taxing away, or it's also called marginal propensity tax. So government takes up 0.1. How much am I left with now? I'm going to call this change in YD. D for disposable income. I'm left with 0.9 now. Okay, so I'm left with 0.9. How much do I now spend from 9.9? Of 0.9, which means my new MPC dash will be 0.9 into 0.8. In other words, it's 1 minus T into 0.8. 1 minus 0.1 into 0.8 will be your after tax, which is equal to 0.72. And how much do you then end up saving? Very nice. 0.2 into 0.9, because which is 0.18. Right? Now, guys, in the two sector model, my MPC plus MPS was equal to 1. In the three sector model, my MPC plus this MPC plus MPS, I'm going to call it dash because this is after tax, plus my MRT, marginal rate of taxation or marginal propensity to tax, should be equal to 1. So if you do the math, 0.72 plus 0.18 plus 0.1, you will find out that will be equal to 1. So in the So whenever you are in a three-sector model, you may need to change the values of your MPC and MPS to reflect after-tax situation. Got it? Are we good? Makes sense? Any questions, guys? Do we get this idea of how MPC? We'll see a lot of MCQs which will help us understand how this gets tested. But I want to now move on to a new equilibrium. Remember, when you are going to now treat your MPS, this is your value of MPS. This is the value of your MPC, and this is your tax rate. So now let's make our equations. Okay, we're going to stick with the same numbers. Okay, so AE is C plus, sorry, you want to go back? Are we good to move on? A is C plus I plus G, okay? Where C is 100 plus 0.72i. Remember, now we're going to put that one. I'm not taking 0.8y because I'm looking at new MPC. C plus I is 250 from the last, and now G I suggested 170, right? Okay, so that's one thing. What's the equation of saving? Minus 100 plus 0. What should I write? You used to write 0.2, now I'm going to write 0.18. Because MPS is 0.18, right? And T is 0.1y. Okay, so this is my new numbers after tax numbers because I changed my MPC. I'm going to highlight this. I changed my MPC, I changed my MPS, and I also brought in this. Okay. In the two-sector model, just to remind you guys, three-sector, this was C was 100 plus 0.8y and saving was minus 100 plus 0.2y. Okay, are we good? So how do I show this now in a diagram? So guys, let's draw the diagram. Rule for the diagram is always make A is equal to Y. And I'm going to make two diagrams, guys, just to let you know. I have more space, so I'm going to make two diagrams, one on top of the other. So whenever you make diagrams, just have enough space to have both the withdrawal and injection diagram below so that you can equate to what is happening. Now, AE is equal to Y is the first thing we'll draw. This is AE, this is your Y. And our equation right now is this one. Okay, so I'm gonna, what's the total number? So AE is equal to C plus I plus G, where C is 100 plus 0.72I plus I is 250 plus G is 170. So 250 plus 170 plus 100 is equal to 350 plus 170 is 450, 540, if I'm not mistaken. So AE will be becoming 540. Yeah, am I right to do the math? Can you do this math again? 250 plus 100 is 350. 350 plus 100 is 450. 450 plus, no, 530. 530 plus 0.72y. 520, sorry, 520. 520 plus 0.72y. Yeah, let's just see if the numbers are consistent with our notes. $520. So we write 520. I'm just making sure the numbers stays consistent with our notes so that when you're reading, so AE naught becomes 520 plus 0.72y. Yeah. Let me just also move this text on this side. Guys, how do we find out equilibrium income? How do we find equilibrium income then? At equilibrium, what happens? AE must equal to Y. What is AE? 520 plus 0.72y must be equal to Y. So what is this going to become? What is Y minus 0.72y? Because this goes on that side, right? So 520 is equal to Y minus 0.72y. It becomes 0.28, shabash. 0.28 y. 0.28y is equal to 520, or y is equal to 520 over 4.28 is 1857. Good job. Good job, Abdul Rahman. Y will become 1857. And what happens lower down? Lower down, I'm going to write two things, guys. Can I have 1 minute of attention for everyone? Lower down is, I'm sorry, not AE. Lower down, I should write uh, W comma J, right? What is my equation for W? W is S plus T. S is minus 100 plus 0.18y and T is 0.1y, right? So my equation will become minus 100 plus 0.28y. So I'm going to write W is equal to minus 100 plus 0.28y, right? And J equation is what now? Can somebody tell me what's the equation for J now? J is what? I plus G. So what is I? 250 plus 170 is equal to 420. So I'm going to write J is equal to 420. Can somebody prove to me why W is equal to J will also lead to 1857? Can you solve this for me? If W is equal to J, just like A is equal to Y. So A is equal to Y gives you 1857. W is equal to J should also give you 1857. That's what I made in my diagram. Why? Because I know this W is minus 100 plus 0.28y and J is 420. If this goes on the other side, 0.28y becomes 520 or y becomes 520 over 0.28 is 1857 again. So we are doing the right thing. Okay, so in a three sector model, guys, first you need to change your MPC, MPS, and MPT. Whatever the tax rate they give you, you change that numbers and you get the 1857. Now, what is the new multiplier? Because the multiplier will change. Remember, what was the value, what was the formula for multiplier in two sector? 1 over 1 minus MPC, or in other word, 1 over MPS, right? So guys, can I have 1 minute of attention from everyone? This is an important principle to remember. Multiplier is always equal to 1 over MPW. MPW means marginal propensity to withdraw. What was the two sector withdrawal? In the two sector, the only withdrawal was saving. This is your two sector. And that's why my formula was 1 over MPS was my multiplier. Okay. In the three sector, my withdrawal will be S plus T. And therefore, my multiplier will become 1 over MPS plus MRT or MPT. MPT and MRT is the same thing, marginal propensity tax or marginal. So this becomes 1 over 0.18 plus, what is MPT right now? 0.1 or 1 over 0.28. What is 1 over 0.28 equal to? Anyone? 1 over 0.2? 3.57. Yeah. Can you guys see this? The multiplier now is 3.57, but the multiplier before was 1 over 0.2 or 5. Why is my multiplier value Why is my multiplier value going down from 5 to 3.57? So why is my multiplier value going down from 5? Sorry, because more withdrawal is happening. The more withdrawal, the more withdrawal, the slower the economy will become. Remember, we said this that the multiplier is when you are changing money now, not only taxes, not only savings are making it slow, but taxes will also make it affect. So if you know 3.57 is your multiplier, and if I say AE, change in AE is, we've done this MCQ, so I want, if change in AE is 100 and your multiplier is 3.57, what will be your change in Y? Anyone, what will be the change in Y? We did these MCQs, so what's the formula? Change in Y is equal to, anyone online? Change in Y, change in Y is equal to change in AE times multiplier. Change in AE is 100 times 3.57, 357. So the reason why I'm saying this is because if I make this, guys, if I increase investment by 100, if I make my investment go up by 100, I know my GDP will change in Y will be equal to 357. Why? Because I know my multiplier is going to be 3.57. So in an MCQ situation, guys, in an MCQ situation, they may give you information and they may ask you for the multiplier. When I get done with my 3 and 4 sector model, I'm going to show you some MCQs for that also. But we get the idea that change in you. So when you're doing 3 sector model, you're changing few things. Number one, when they give you tax rate, you find out your MPC after tax, you find out MPS after tax, and then you change your withdrawal equation to S plus T, you change your injection equation to I plus T, and you change your A equation to C plus I plus G. And your multiplier now is not 1 over MPS anymore, it's 1 over MPS plus MPT, because now you have one more withdrawal. In the 4 sector model, when we do tomorrow 4 sector model, your multiplier is MPS plus MPT plus what? Plus MPM, because you will now have one more thing withdrawal. So that multiplier will be smaller because imports are also making it's shrinking the your multiplier. Okay, and so tomorrow what we'll do is we'll bring the international trade and we'll do some MCQs to discuss this. If you can do me a favor, since you guys have the notes, just go through these notes all the way till like 3 sector model multiplier. Yeah, just just look at that, just go through this, and tomorrow we'll do 4 sector model. So just make sure that you guys just read this quickly. Whatever we've done today is what I've just covered it. Just read it one more time before you guys are sort of coming to class tomorrow. Okay, thank you very much, guys.